Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and the regulatory landscape. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Steve Miele. He's Chief Strategy Officer of Kezar Markets, operator of LeveL ATS and Luminex Markets, Robert Valdes-Rodriguez, Chief Commercial Officer of Keyrock, and Michael Zagorsek, Chief Operating Officer of SoundHound AI. We're here to discuss innovation in traditional asset classes and crypto trading technology, essentially how emerging technologies are evolving the financial services space. It is great to have all of you with us. Steve, I'm going to kick it off with you. Give us a high-level overview of Kezar Markets, where you fit within the financial services ecosystem.
Thanks, Jill. So Kezar Markets is a consortium-owned trading platform. We're owned by a sample of sell-side, buy-side, as well as Nasdaq as a strategic investor. Within that framework, we operate two ATSs in the U.S. equity exchange space. The LeveL ATS, which is a more sell-side liquidity provider focused pool that also has a VWAP trajectory cross mechanism within it, as well as the Luminex ATS, which is our buy-side to buy-side block trading servicing the asset management community.
And Robert, Keyrock.
So we focus on developing technology for algorithmic trading, market making, and really overall liquidity provisioning within the digital assets industry with crypto markets. And we work with institutional and corporate clients as counterparties all over the world who are really looking for that type of algo liquidity. And we're headquartered in Belgium. We have presence in London, Switzerland, Singapore, Hong Kong, and New York.
Yeah, we'll be in Hong Kong and Singapore in October and November, so we'll have to come by and see the offices. Michael, tell us about SoundHound, where you fit within the financial services ecosystem.
Sure. SoundHound AI is a conversational and voice AI company. Our vision is simple: is to voice enable the world with conversational intelligence. We've been in business about 20 years, publicly traded on Nasdaq, hashtag SOUN, and we are cross-industry, actually. We believe that voice AI and AI in general is really able to span across industry. We do have financial services clients where we empower conversational AI, specifically internally and externally, to facilitate transactions and automate.
Yeah, it's so interesting. Now that AI is more part of the consumer vernacular and how we're able to conceptualize things in different ways than perhaps we would have even just a few years back. But Steve, I want to kick it off with you. When we think about market liquidity in today's climate, especially with emerging technologies, it's Moore's law, more technology begets more technology. How is that being impacted?
Well, you mentioned AI. When you look back at the ATS space, when it was kind of first came to fruition, which close to say 20 years ago, LeveL launched 18 years ago. ATSs were launched as a means to minimize market impact, increase, and to really help the client increase, their way of transacting. Lowering cost, et cetera. As we kind of fast forward, then smart order types started coming to fruition, AI order types. When's that best time to execute? You find a counterparty, they execute at a price at what's that optimal time? And now, kind of fast forward, we're in a space where, with the VWAP trajectory crossing mechanism, for instance, finding a counterparty not only to trade at a price, but to trade at a benchmark that you also want to trade at. So it's kind of evolving into from just trading at a certain price to then finding that counterparty that wants to trade specifically the way you want to trade as well.
Right. So, I'm sorry.
Yeah.
And Robert, when you think about the evolution of trading, now you're starting to think about on-chain trading as well in the digital asset space. What are some of the similarities, the differences? Are there any crossover when you think about TradFi to DeFi?
So it's really interesting because when you compare the trading with traditional asset classes versus crypto, they're actually quite different. Because if you think about most of the trading that's going on in traditional asset classes, it could be equities, fixed income, foreign exchange. Most of those assets are traded in centralized venues, really 5 days a week, 7 or 8 hours a day, right? And if you're trying to access liquidity outside of that window, it's kind of challenging. And in some cases, it's just not open. You can't find the liquidity. And crypto actually turns that on its head, really, because it's 24/7. It's active on not only centralized venues, but it's also active on decentralized venues. There's no closing bell, and so it's always continuous. And more of that volume is starting to trade on chain, which means that that's going to just expand continuous liquidity for crypto assets around the world.
Yeah, and Mike, you had brought up voice AI in financial services.
Yeah.
Give us an example. What is that about?
Well, you almost can't have a conversation about innovation across any industry without talking about AI at this point. And I think we really need to step back and look at the revolution from large language models, right? And because at the end of the day, AI is automation. And what that means is companies from the beginning of time are measured by output. And they're always looking for ways to increase output with the fewest resources. And when there's a new technology that comes along that enables that, everybody has to lean in. And financial services is no different. So a few years ago, large language models come into fruition. And really what they're able to do is process large amounts of data and give answers in a conversational way. So the intersection of something like voice AI and conversational AI and large language models is really important, because now you have a technology that you can input things into a conversational way and it will respond in a conversational way. So we've been doing voice AI for 20 years. We have our own proprietary software, but the inclusion of this empowers anybody top to bottom in an organization. So traders now can provide volumes of information into a tool like ChatGPT. It can process it and put it out. Pattern recognition, you can put a lot of variety of information. So it's, but it's all done in a conversational way. You don't need an interface or a screen. You can just type it in and get the response. So there's this great convergence that's disrupting all industries, and I think financial services is right there.
Yeah, I think it'd be interesting to see if you get the output and how it interprets how traders communicate with each other on instant messaging. Certainly it's different than open outcry, but as these models are developed, it's always at the end of the day, Steve, about what the output is and how structured that data is.
Yeah, so kind of, it's interesting because it sounds like you guys are removing friction for people to get answers, right? That's really, in essence, that's what Kezar is. We're trying to remove friction in executing, right? So we kind of have evolved into this ecosystem of liquidity. So you have a centralized point, single point where a client can interact, but then you layer in the technology so that they can customize how they interact. And so it's really having it in one spot, but then building off of that, and how do you maximize it, the experience for the client?
Right. So it doesn't remove the people from that side of the equation. I mean, there's always going to be people interpreting the strategy and maintaining those client relationships. Or do you think it's something that could become fully an LLM situation?
Well, it's really interesting when you start combining and comparing what's going on in traditional asset markets when you're comparing it to crypto, right? I think I mentioned earlier that we're starting to see more trading go on-chain. I think one of the reasons for that is because when you look at traditional asset classes like equities and fixed income, they're really capital efficient. In some cases, they have prime brokers that allow their participants to be able to express their strategies and their views using leverage, and it's really great use of capital. They actually centralize counterparties, and they can basically reduce counterparty risk. So the reason that some of the flows are starting to go on chain, because imagine managing counterparty risk in crypto, we don't have that level of development and capital efficiency yet, right? So going on chain, every single transaction that goes on chain is automatically recorded, automatically validated on chain, automatically confirmed on chain. So that level of security kind of is really appealing for traders and institutional counterparties who want to go and access that market. It's moving very, very fast on chain and eliminating a lot of the counterparty risk.
Well, what's also so interesting too, I mean, we're using SoundHound technology for financial services, automotive, food, healthcare, and so forth. It always comes back to data at the end of the day.
That's right. That's exactly right. The question comes down to, where does the knowledge reside and in what format, right? In the past, you had to have databases that were accessed, or you knew there was that really smart person that knew everything. Ultimately now, the data is really going to reside in basically a large language model that you access. But the challenge is it's definitely not plug and play. Like, you can't just say, we're going to use a large language model, we're going to ask it for all the questions. This is where the humans come in. You do need to validate the answers that you're getting. So the expertise is really important, even though the power of what's being done is way faster, more accurate than most humans can do. But then you need software solutions that can parse it. So what we do at SoundHound, for example, is we're in cars, and we support a variety of institutions. We allow customers and employees to interact directly with the conversational agent that we build using proprietary technology and LLMs. But if you don't manage it, we've all heard of hallucinations, right? So you really need to work with a partner that can harness it. So companies are doing it internally. I think you can't throw a rock without hitting a company that's using AI to solve some kind of problem, specifically on LLMs. But they learn really quickly that you have to manage it and you have to have the right interface. But it will ultimately become the essential tool to get answers to augment and amplify what people are able to do.
And I think that's a great point that you bring up, where you're looking to solve problems,
That's
not
right.
just implement a technology for the sake of implementing. I remember in 2017, 2018, all I would get is pitches on blockchain. And people would attach blockchain to their story, or in fact, to some of their names. And I feel like the way, I mean, AI is nothing new to any of your companies, but the way that we're talking about it in a more public forum, it's problems that need to be solved. It's not just, okay, let's spend money, increase our tech stack. This is a problem I'm trying to achieve to make it more efficient for my clients.
No, for sure, Jill. And I think what we've seen over the years is we've tried to, as we've kind of evolved into more of a fintech looking like company, we've tried to bring our clients along for the journey and be that outsourced product development. So we work with large institutions that maybe don't have the bandwidth to build a product. It may take them 3 years to get something to market that may take us 3 months. So, you know, kind of solving problems for larger institutions, and that's, you know, it gets them to market quicker, and that's where we've found that when you bring the client along for the journey, really you can bring some very interesting products to market.
Yeah, you certainly can. We were at a conference earlier this year at Consensus, which of course is, you know, the integration of DeFi and TradFi. Somebody made a really great point. You know, we're acting like a startup, but we need to think like a tech company and scale. So I feel like the marriage of, to your point earlier, Steve, where, you know, these companies can scale, but be more nimble and get product to market quicker.
Yeah, I mean, you're nailing it right on the head. Technology is moving so quickly in crypto, and I mentioned earlier about the volumes going on chain. It's really solving a lot of problems, the counterparty risk, the capital efficiency, but some new risks arise when you're developing this technology, right? And you have to learn how to manage. So as an example, smart contract risk comes to mind. Smart contract is a self-executing agreement where the terms of that agreement get basically written into code and are not reversible, right? So those risks, what can happen? Well, maybe there's a bug in the code, or maybe there is something abnormal going on in the blockchain. So what Keyrock does to kind of risk manage is we have dedicated teams relating to risk management, security, and also surveillance across the blockchain and all the liquidity pools. And for us to be a leader in providing liquidity in those markets, you have to have all that. It's completely non-negotiable. With one development and technology that solves a problem, other risks arise, and you have to be ready to be able to be leading and managing those risks.
Yeah, well, I mean, that's how you grow economies at the end of the day, right? You know, new skill sets and so forth. But you had made a really interesting point before, Mike, where it comes down to pattern recognition. And I sat on a panel recently with AI and trading, and the person I was interviewing was talking about how scientific disciplines are brought into this.
That's right.
So, for example, pattern recognition, physics, you know, other areas that you wouldn't necessarily associate with financial services or trading, but bringing in different disciplines on the more sciencey side.
Absolutely. I mean, data science is a whole category, machine learning is a category, and these are algorithmic engineers who themselves are looking to create basically code that does pattern matching and recognition. And I think what's really powerful about what AI is, it can be proactive or reactive, right? So proactive is you design a system that's going to alert you for various things, just like the example that you shared. And of course you have to vet that, but the reactive is that you ask a question, you get an answer, and you're training the model to do those things. I think the reality is that if you're not heavily working with AI at this point as a company, you're already behind. And we predict that this wave of business generated by AI will fuel growth for the next 10 years, right? You had mobile before it, you had internet before that. Each one was about a 10-year cycle. I think we've seen that peter out. And of course, blockchain and crypto had a moment, faced some headwinds, doesn't mean it's going away.
Right.
But this wave of growth is really that, and it's really about harnessing it, using it, working internally and externally with the right partner.
Yeah, and even going back to blockchain for a moment here, I think there's sometimes, you know, where it's associated with crypto, but at the end of the day, blockchain is the underlying infrastructure that, you know, is allowing DeFi and other industries to evolve on a more transparent way.
Oh, absolutely. And again, I think it's a great point. I mean, our vision really at Keyrock is that eventually financial markets will be built on some sort of decentralized technology, the technology that we have within crypto. And if you look at what happened in March with BlackRock having really launched their BUIDL fund, it's basically a tokenized money market fund built on the Ethereum blockchain, right? And it's all run by smart contracts. So we think that's just the beginning.
Yeah.
And I think the intersection of AI is going to get right in there in driving the development of a lot of those investment vehicles.
Yeah, great point.
I mean, that's the argument, right? For the underlying infrastructure. Of course, market infrastructure is always evolving, right, Steve?
Absolutely, yeah.
So, I mean, our conversation could look very different a year or two from now, based, relative to what we have today. So what's your outlook? Are we in early innings, or are we still in the process of developing?
I think, when you're looking at where we are, what are the barriers to entry? For our space specifically, the barriers to entry are reasonable, which I think is very good for the end client, because you have these new offerings coming out. We have, we have competitors coming out constantly with new offerings, and I think that barrier to entry is important to keep that low enough so that new products can come to market, and then the market can decide what will and won't work. That's really the ease that you can implement a new technology, very important, but I think the super competitive space is going to continue, and that's good for the end client.
Yeah, well, it's really good for the end client, but again, too, financial services, one of the most heavily regulated spaces as well. So, there's just a number of skill sets that have to be brought to the table. But I do think it's encouraging that the barrier of entry is relatively lower, because it doesn't stifle innovation.
That's right.
That way, right?
That's
You don't necessarily have to be a Nasdaq-listed company to come up with new ideas.
That's right. Yeah, that's why, one report says 1% of bank executives are investing in AI specifically, and they know that on the customer service side, 1 in 5 banking customers leave because of bad customer experiences. So they're asking themselves, how do you invest in technologies that are ultimately going to not only preserve your business, but ultimately grow it? And so the retail side of it is really significant, because at the end of the day, you have to reach and connect with customers. And in fact, even the earliest days of call center technology, which companies would invest millions and billions in really bad technology because they needed to automate. Finally, the technology is catching up with the intent, and I think that's where we're going to see an explosion.
Yeah. All right. We will leave it on a positive note. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.